Hello. Hi, everybody. Great. Thank you so much for joining us. Super excited to have everyone. Sorry, my desk was just shaking a bit. So today we are doing something really exciting. Hopefully you've been enjoying over the past couple of weeks receiving our kind of emails, the new format we're exploring of getting a little bit more in depth and sharing some more kind of actionable tips as kind of people work through some of the challenges around starting a new business. We've heard loud and clear from you members of our community that a lot of you are thinking about it. And so really happy to have you here. We have some questions that have been shared with us kind of by course participants in advance of this, but if you have anything specific you want to ask, just toss it in the chat. Super excited to be joined by our expert guests over kind of the next, about 45 minutes. And we're going to cover through some of the, the main questions people had that we didn't cover in the content, but kind of looking forward to hearing from you. And please feel free to kind of jump in if there's anything else that you want to know. Leah, if you want to bring some people up, we'll do introductions. I have to close my door so you don't hear everyone having lunch. So just 1 second. Okay, great. So maybe we'll start with, I'll go clockwise on my screen, which might not be your screen, but maybe Shane, would you like to do the honors of introducing yourself?
Sure. Yeah. Happy to, Jared. Yeah. So I'm one of the sort of founders and operators of Ownr, which is a venture of RBC Ventures. Effectively, what we do is we help small businesses and a lot of startups get registered, get set up with the government, and then kind of automate a lot of their ongoing legal needs and legal compliance. So all your government filings, contracts, even equity management, we can handle a lot all through our technology. I used to be a corporate lawyer and then actually had my own startup, which was acquired last year by RBC before I joined Ownr. So I kind of know things from the legal perspective, but also the nitty gritty of running a startup too. So that's me. I'm very happy to be here and take some of your questions.
Yeah, thanks, Shane. And I mean, just a quick note is I personally have been a customer of all these companies that we featured here, and so we wouldn't be using or recommending them or partnering with them if they're we didn't think that they were kind of definitely up to the job. So the Ownr experiences, the Humi experience, and the Apollo experience is all kind of terrific, and pricing, at least in my use case, was definitely best in class. So we can answer questions like more specifically and kind of give some honest questions you have about the specific items and why we might have selected one over the other, if you do want to kind of toss that in the chat. Andrea, do you maybe want to introduce yourself and Humi as well?
Absolutely. Hi, everybody. My name's Andrea, and I'm the Director of People Operations at Humi, which is a leading all-in-one HR solution for processing HR, payroll, and benefits. So as the Director of People Operations, I oversee all of the functional areas of human resources. Throughout my career, I've also exclusively worked with startups and small businesses. So everywhere from, sitting at the kitchen table, trying to work through a business idea, getting the employment agreements off the ground through to leading teams. Certainly happy to be here today and talk about all the fun things that happen within starting a business.
Great, thanks, Andrea. And Kieran, would you be nice enough to introduce yourself and Apollo as well? Apollo
of
Insurance.
Course. Yeah, thanks, Jared. My name's Kieran Knock. I'm a team lead here at Apollo Insurance. We're a digital insurance provider specializing in commercial business insurance and then personal lines as well. We found that particularly on the commercial side, getting insurance, small business insurance, if anyone's ever dealt with that, can be quite a headache. It can be confusing. It can take a while. We wanted to simplify that process, make it possible for certain businesses to get a quote within minutes and move on with starting their business, because the insurance is one of those nitty gritty details that you got to handle in most cases to proceed and start growing.
Yeah. Thanks, Kieran. So, I mean, just kind of starting off, like, we got a lot of questions about U.S. clients and contractors, in terms of either receiving payment from U.S. clients or kind of paying U.S. contractors. So, I mean, just kind of starting on the U.S. side, if a client or if a company or a person wants to receive payment from someone in the U.S. for services that kind of like done here, do they need to set up a U.S. corporation, or can they just kind of do it right away without any of these needs? I mean, I think I know the answer, but just want to check. I mean, Shane, did you have a thought about this?
Yeah, for sure. I can jump in. Yeah, as a Canadian operating business or Canadian-based business, you can certainly have clients anywhere in the world. What it's going to come down to is where those services are provided and where the income is effectively booked. So I think at TechTO, I can assume I'm talking to a lot of tech companies. So yeah, you don't have to worry about setting up a U.S. corporation in order to offer online services in the U.S. If you want to open a Silicon Valley office and
Can you
operate
have
from
U.S.
there and
employees
have
for a
employees
Canadian
there.
company? Or do you need a separate U.S. company?
So, Jared, I'm not sure it was my connection or yours, but I jumped around there a second. I was just saying that, yeah, for the most part, a Canadian company can absolutely take income from the U.S. customers and record it here and pay taxes here on that income that comes in. So there could be some issues if you wanted to open a physical office in the U.S. with setting up a U.S. corporation, but for the most part, it's not an operating concern. It's more of a tax and bookkeeping concern from the start.
And so I guess just following up on that question, can you have U.S. employees of a Canadian company?
You certainly can. Often, though, once you start opening up yourself to having employees based in the States and sort of a U.S.-based office, then it would be time to look at setting up a U.S. corporation. So those U.S. employees would be actually employed by your U.S. subsidiary. That would be typically the way to do it. And you can also early on, if you're just sort of experimenting with your expansion from Canada into the U.S., you could work with contractors and keep a Canadian company. But the second you have a real office with real employees in the U.S., that's probably the time you want to start assessing, is it time to really open up a U.S. subsidiary, because you are really operating in the U.S. You're not just, there's a difference between operating in the U.S. and having customers in the U.S. That you're servicing from your Canadian headquarters.
Okay. I mean, Andrea, from your experience with Humi, I mean, is payroll for U.S. employees for Canadian companies? I mean, is that relatively simple proposition?
It is not fairly simple. Each obviously outside of the federal differences between Canada and the U.S. from a payroll remittance standpoint, you also have different remittances province to province, and of course in the States, state to state. As was being mentioned in the chat, it does get trickier and trickier. And typically a practice that we see for smaller businesses is to keep individuals who are employed in the U.S. and working out of the U.S. on as a consultant or as a contractor for as long as possible. And then evaluating, is there actually, as Shane mentioned, going to be operations there within the U.S. to determine if it makes sense to set up a subsidiary.
And so I guess kind of, not to do a full circle on every question, but I mean, Kieran, we had some questions in advance around insurance protection for contractors a little bit. So like if you're covered by, an E&O policy or a general liability policy and you hire contractors, if there is an error in their code or they do something that results in a claim, would they be covered under your policy, or is that kind of, do you need to be specific about that when working with them?
Yeah, that would fall under a certain coverage called errors and omissions insurance, sometimes also called professional liability insurance. So that's ultimately extending to the sort of professional operations or professional capacity that you're operating in as a consultant or third-party contractor. So I think what a lot of business owners will see is there's certain third parties that will just ask for commercial general liability. But if you are operating in that professional capacity, it's important that you do carry that errors and omissions insurance to help protect you if you were to make a mistake, or if you're hiring a contractor and they were to make a mistake. That is typically the kind of coverage that you're going to want to see.
And then, so I guess kind of going back the other way. So we had a question about indemnity clauses. Maybe, that those are kind of common in business agreements or services agreements. Could you maybe explain a little bit about what they are and how your insurance kind of relates to them?
Yeah, of course. So indemnity clauses, basically, it's going to ask for, you're going to see this with a lot of third parties that you could work with as a contractor, basically asking for proof of insurance in the event that you make a mistake. If you're doing work for that company, or you're consulting for them, if you make an error that leads to a loss or claim on their end, they're going to want to know that you're going to have the coverage in place to be able to cover the loss. So you're going to indemnify that party for that loss. Now, it's quite often that you're going to see a variety of different clauses on these contracts. It's always a good idea. Typically, the insurance policy is going to satisfy most of these clauses. But it's always a good idea to speak with your agent broker just to make sure if the party that you're working with is asking for specific types of coverage on your policy, you should always confirm that you are getting that, because there can be certain exclusions depending on the operations, depending on the insurer, and depending on the policy.
Yeah, and I mean, just from a practical point of view, like from firsthand experience, this whole process can take a little bit of time, because sometimes your customers will also ask for an insurance certificate, which doesn't cost extra, but you'll generally need to work with your broker to provide, and that would be kind of a piece of paper that has your client's name on it that they can be covered under your insurance. So like if you're doing a big RFP or something like that, that's often a big piece of it. And, like I found that our broker is always very responsive, but like it's not necessarily a one and done, you buy this and walk away relationship, that there's kind of ongoing activities and that need to happen. So
I was just going to jump in from a legal perspective quickly and just really encourage early stage companies, especially if they're operating kind of a B2B relationship with larger established companies, as a lot of startups are. These indemnity clauses can really come back to haunt you, where their standard form contract will have an indemnity clause which sets out a claim which your early stage startup would never be able to satisfy if they called on that indemnity. So they absolutely look into insurance for these sorts of things in the first place, but push back on making indemnity commitments that you're not in a financial position to support anyway.
Thanks, Shane. I think that's really helpful. And I guess kind of just building on that one a little, or I guess a separate question is, this came from someone who's like started a couple of Shopify stores. And the idea was, wondering, like currently they're all held under one company. Like if your business runs a bunch of different businesses or sells a bunch of different products, should each product or company, should it be its own company, or do you just have one company that has a bunch of different products or businesses?
Yeah, from the legal perspective, I think what I would really encourage people to do is look objectively at their business and decide, do you have multiple companies or do you have multiple products? There's no real reason to incorporate different companies for each product if your products are all kind of complementary to your one brand. But I come across tons of entrepreneurs and early stage startups that are basically dabbling in unrelated things and seeing what sticks. In that case, if your products are really unrelated and are separate companies you're operating at the same time, set up different companies for those, so you can, for bookkeeping purposes and investment purposes, you really know what you're getting yourself into. But one company can have multiple semi-related products under one brand. And if people think about acquisition, if that product takes off and we really want to sell that off, that's fine. You can sell one product as an asset of the business and keep your sole corporation still running. So I think a lot of my advice to entrepreneurs is keep it simple at the start. Don't set up a web of corporations unless you really, really need one. So that's all to say. I think most people are fine with one corporation offering many products, unless they're really just operating different companies, in which case it's not hard to set up a corporation for each one if you really need it.
That's helpful.
If I could, sorry, I just wanted to kind of piggyback off of what Shane was saying there. I think you're making a good point, Shane, just about the different types of companies, and in a different example, the operations. In my experience, I've run into certain business owners that are trying to insure a bunch of different operations that are so wildly different. Like they might be a bar and restaurant, but then also offer horseback riding lessons, like under the same legal name. And they're trying to purchase insurance for both of those operations under that legal entity. And it really complicates it complicates the process and your ability to get insurance, because you're dealing with two completely different risk profiles. One, you're dealing with liquor liability, and then the other, you're dealing with like a pretty big risk associated with, in this example, someone getting hurt in the horseback riding. So I think to your point, if the products that you're selling are similar, by all means, if it complements that brand, it makes sense to have it under that legal entity. But otherwise, if the operations are wildly different, you'd want to consider maybe splitting that up.
Thanks, Kieran. I think that's helpful. And I guess, Andrea, kind of, unrelated to the previous question, turning to you, is we had a bunch of questions about when people just getting started, either having one employee or them and their co-founders both being employees, or having kind of less than 3 or 5 employees. And I was just wondering if you had any thoughts about how do you get started with payroll, and how do you pay yourself or pay you and your co-founder when it's just when there's so few of you? Do you go and sign up with a Humi or a payroll provider, or does that come once you have 5, 6, 8, 10 employees?
I mean, with Humi's payroll, our how we started was servicing small businesses as small as two. I think the question is it one person? Is it an individual sole proprietor? What is the business structure? Because at that point, you're effectively taking money out of the business to satisfy a salary. So is it truly a salary obligation where you need to remit, the required taxes and withholdings, or is it truly an employee? And that always comes down to, what are your articles of incorporation say? What is the employment agreement? Is there truly an employee? And at that case, then you weigh, okay, if there's two people here, I am the founder, but I have someone working for me, maybe part-time, maybe they're a student, maybe they're somebody with a completely differentiated skill set, but they are an employee. In that case, yes, you would need to set up a payroll. And as I mentioned, Humi services clients as small as individuals, certainly on the insurance side, but from a payroll perspective, as small as two people. And the point being that there is a difference between when you're a co-founder or a sole proprietor, whether you're the only person working at the business that's incorporated versus having an employee.
So if you're, sorry, just to understand, so if you're taking money out of if you're the single employee of the business, then you're not required to do the same kinds of deductions as you would if there was an employee?
Technically not at that stage. If you were the only person, no.
Yeah, that's really interesting. I mean, I imagine that could be quite helpful for to think about for a lot of people who are kind of just getting going. It saves you some obligations.
Yeah.
I think there's a related point there too around like salary versus dividends, and we hear that question. Maybe Andrea, you probably get it a lot too from people early on who are saying, how am I want to take money out of my business, so what's the best way to do it? And it comes down. I guess we can break it down really simply in terms of if you're paying salary, that's an expense to the corporation. So it's a tax deductible expense. It could be helpful to the corporation to have salaried employees. But on an individual level, dividends are more tax beneficial from an individual perspective. So when you take the money out of the corporation, a dividend isn't an expense, but personally, you might pay lower taxes on that dividend. So this is probably something better addressed by an accountant, but I don't know if, Andrea, you wanted to build on that. That's sort of an amateur explanation there, but pretty high level.
No, I mean, it's a great distinguishing factor. How are you taking the money out? Are you taking money out? Is it after profit you're taking that out and then paying that back to yourself? Ultimately, it's the same entity. And it really comes down to the tax structure. And I'm watching the chat here, the difference between is it money that you're taking out of the business versus a shareholder loan. If you are the only shareholder, that's a great distinguishing factor as well. I'm certainly not an accountant, but I know that our payroll team at Humi answers questions like this, certainly for small businesses quite often, because it really depends on how your business is structured and how it's set up at the initial stages.
So I guess to that question is we had someone asking, there's only two of them in the company. Can they just be a partnership? Like, do they need a corporation? And also, I guess, if anyone had any suggestions, if one was better than the other in the event that they disagree on something.
Yeah, the way I explain partnerships to people is generally they work well for contemporary businesses. Like if the four of us were getting together and going to run a lemonade stand for the summer or something like that, we know that there's a specific time frame. We can figure out things like who's going to work when and how we're going to split the profits. But the minute you've decided to work with other people in terms of a long-term business that you want to build up, a corporate structure makes a lot more sense for a serious long-term project. The reasons why I could get into a little bit around risk and liability is a huge part of it. If you're working with even one other person in a partnership, they bring with them all their personal baggage. There's no separation of personal and corporate liability, which you'll get the minute you incorporate. So if your partner comes to this partnership with years of debt, creditors are banging down the door looking to get them, and you actually succeed and build a successful business under a partnership structure, you're putting that new business, that partnership at risk there from all those personal creditors looking after personal debts of the partner. So I don't know how much everyone wants to get deep into the woods of the implications of personal liability and corporate liability, but a partnership really doesn't provide you with that sort of protection. The minute you incorporate, you've got legally a brand new person. A legal person is a corporation, so you're basically starting from scratch. So I think this is a very long-winded, convoluted way of getting back to the question, which is, I think you'll want for a new business to get these benefits of incorporating. There are tax benefits, there's liability benefits, and those don't come with partnerships. So I would say incorporate your business if you're serious about pursuing it over the long term. I see Jason's comment is very on point there. Yes. No personal liability is always better.
So yeah, and I guess kind of Kieran, going to you, we had another question that was, a client wants me to carry $2 million in insurance, which feels like overkill. Is there a way to increase my insurance while they're a client and take it back down after? What happens if the work was done while the insurance level was $2 million, and then I take it back and they claim when my insurance is only $1 million? Like, does the $2 million apply in perpetuity once for the work period? So I think just generally, questions about, I guess, probably working with companies that are much bigger than startups.
Yeah, so there's a few things to address there. With respect to the $2 million liability limit that you're going to see a lot of vendors request, some cases it might be 5 million even, and certainly understand how that seems like it can be a lot. But I would say, at least from industry standard standpoint, like 2 million is pretty standard for a lot of small businesses. Depending on the risk and the kind of protection that they want, they might carry a higher limit, they might carry a lower limit. I would see a lot of insurers won't offer less than 2 million in certain circumstances. Sometimes they can accommodate lower limits, but when we're looking at a $2 million liability limit, you're taking into consideration something like, if you had a claim, there's a lot of costs associated with defending that claim, especially depending on the size of the claim. So there's legal fees, there's court fees, there's lawyer fees, there's settlement costs. So it really can add up, I think, a lot quicker than you might realize if you've never dealt with an insurance claim or you've never been taken to court before for negligence operating as a business. It depends how much or what sort of loss, financial loss, was suffered by the third party. So it can be quite complicated and more expensive than you might anticipate. With respect to increasing limits, I would say, like, for a limited period of time, I would say that you should carry a limit that you think is going to be sufficient for you to do business. So if you're carrying 1 million and you want to, or someone's asking that you increase your commercial general liability, for example, to 2 million, I would recommend just carrying that $2 million limit just continuously throughout the lifetime of your policy, because if you're switching around the limits and only insuring when you feel that you have to, insurers can get a little sticky on that. And typically what I would see, it depends on the size of the policy and the risk associated with it. But if you were to increase your commercial general liability limit from, say, 1 million to 2 million, typically the difference in premium is not that much. It's
not double.
Yeah, that's not always the case. It really depends on the risk profile of the business. And then further that, if you had a claim that was discovered, let's say while you were carrying $5 million worth of general liability and you dropped it back down to 2 million, it's really going to depend on the policy wordings. Some insurers will allow for a $5 million limit. Some will, want to see they'll enforce that 2 million. I think just a general rule is, you're going to have a relationship with your insurance company, your agent, your broker throughout the life cycle of your policy. I would discourage, moving things around too much to save, a few bucks here and there, because it's just going to complicate things and create a lot more work for you. I would typically say set your policy up the way that it needs to be set up at that time. And if future opportunities come up where you need a higher limit, you can increase that limit. And typically that means that the business is growing, especially if you're working with businesses or third parties that want to see a $2 million limit as opposed to 1 million. And you're going to continue to see those sorts of contracts that require that limit. So if you're constantly switching around your limits on your policy, it's going to create a big headache for yourself and complicate things from the insurance standpoint.
No, this is thanks, and that's great. It's helpful, Kieran. I mean, just to give everyone an update, we're going to jump into some of the questions from the participants in the chat in a moment. But what we'll do is we'll probably go for about another 5-10 more minutes with questions, and then we'll jump into a little bit of networking so you can ask one-on-one or chat with each other. But we had a question here from Dan Flatt. Hey, Dan. And it's, what options do early stage founders have to pay early team members on a success basis other than an ESOP? Oh, thanks for highlighting it, Leah.
Yeah, that's a great question.
Sorry.
I was going to ask take from the legal perspective, but Andrea, you go ahead, please.
No, sorry, I'm just looking to read the question again. What other options are there outside of an employee stock option plan? There we go. Thanks, Dan. So that actually is a really good question, because one thing that we look at when we're speaking with clients who ask us this at Humi are, what are the important long-term objectives? Is this a business that you're looking at building for the long-term future? Is it something that's more short-term that you're looking to build and then ultimately sell off? What is the end goal? Is something that we encourage any of our Humi clients to think of when they're evaluating any sort of cash component, rewards and incentive or performance-based payment in comparison to an ESOP plan. Ultimately, again, it comes down to what your business objectives are, short-term or long-term. ESOP plans are a great way to incentivize people for the long term to really see that return and be a part of that growth. Outside of that, rewards and recognition programs, and of course, cash-based performance incentives are something that we see becoming more common. We're also seeing different types of one-time bonuses within the market. Lots of clients asking us about, how do we bring people into the business? How do we have it on a, not a bonus structure, but some sort of a short-term incentive, almost like a signing bonus structure that you can claw back? And how do we track that in payroll? So those are questions that we're seeing that are becoming much more common. And I think often that's in wake of, the need for talent in the market right now, and to find really qualified people within the ecosystem, certainly in Toronto.
Thanks. That's helpful. I mean, Dan, if you have any follow-ups, just feel free to toss them in the chat. We had a recommendation for where to get started on a bunch of these questions. And, asking for books or resources, I'll just talk from personal experience, then we can kind of go around. I mean, for like actual nitty gritty of some of these issues, like all of these companies, the ones here, all the other ones you might know, they're all trying to juice their SEO by publishing a lot of content, so they all have blogs, they all have FAQs, they all have, how to get started, because those perform really well in search, but they're also pretty helpful and informative. So there's kind of the added business of how they're trying to game Google. So, if you're looking for stuff on incorporation, Ownr's website is great. The government actually is a pretty good website. Similarly for HR, Humi or Insurance Apollo, or, other providers as well. They all have great blogs. And that was how I felt was great from a Canadian context for the nitty gritty, the operational stuff. But, I'm just curious. I mean, does anyone have a book that has kind of inspired them, or they found to be particularly helpful? Maybe I'll start with Andrea. I mean, any particular resources that you find useful in kind of shaping and taking early decision?
Radical candor is always a really good one. All these have how effed up is your management style, I think is really, really good, because when you're starting a business and you're evaluating, is it just yourself? Is it a partnership? Are you trying to lead a small team? Having that introspection and that critical review of what your management style is and what it's like to work with you, I think is something that's often overlooked. And Start With Why by Simon Sinek is also a really good one.
Thanks, Andrea. Yeah, I mean, I hope that's helpful. Chari, if there's anything more specific, I apologize if I mispronounced your name. Happy to kind of walk through that. In terms of keeping expenses low, that's a common goal of startups around these sizes. I mean, are there any kind of tips for everything? To kind of help people. I mean, one thing I would say personally is I've used all these services and found them to be lower cost than other providers. Like, Ownr was much cheaper than an actual lawyer. And Apollo was kind of cheaper of other agencies that we looked at, and Humi the same. But kind of curious if there's any tips about structuring or ways to do things that'll help keep your keep your costs low? Like I know one I've heard in common is, oh, I'm going to hold off incorporating until I get a client or need to send a bill. I mean, Shane, any thoughts on any of this?
Yeah, well, I think that's it. Everyone, of course, wants to save money, but you need to look into the long-term costs of avoiding some of these things. Incorporating for me was pretty natural, but actually, payroll software was one, for example, that when I first started out and was hiring employees, I thought, oh well, I'll just figure this stuff out. How complicated can it get? But it's the kind of thing that takes up so much of your time, you probably don't know how to do it right. So there's certain like early stage investments in your business, which you'll find good service providers for, and they'll actually save you and finding a good insurance provider, of course, things like that early on. So that's not a super good excuse or suggestion for how to save money, but the way you save money, I think, is just by keeping things in perspective in terms of where you are in your growth story. What do you need now, and what do you need, a year in the future after you close a funding round, and not to get those things confused. I think in the legal world, we often see, and I've alluded to it before, people that just make things too complicated for themselves. They set up their Delaware subsidiary because they heard that it'll help them get investors, but it's not building your business. It's not something you need to do today. You don't. So as long as you keep things simple and on track, and just get the tools you need to get you to the next step, I think that's how you'll save as much money as possible, without making really expensive mistakes.
Mm-hmm. I will jump in here and say as well that, a solution for payroll, for example, Humi has payroll that you can manage yourself, or we have team members you can pay. Part of the package includes us running payroll for you to really remove that risk and the liability, because it's certainly in the beginning, the liability is something that's top of mind for founders. And the other piece that I will say is, when you look at your corporate structure, the multi-entity payroll is also an important feature for bigger businesses. But when you're smaller, just like, do you need to incorporate multiple entities, or can you keep it? Is it products, or is it truly businesses? Is something that at Humi we also have those conversations with clients as well, because it can become a very complex spider web, which is really important to think about when you're paying people.
I also think that in terms of managing costs, you're starting out, probably insurance isn't the first thing that comes to mind. And maybe I'm a bit biased in this from this perspective. I mean, day one, you're sitting down to start. You're not going to be buying insurance day one of starting your business, but it is something that you're going to want to consider early on. And I think a lot of people, try to manage costs, and insurance is something that can kind of fall by the wayside as something that's not a priority if you don't have some third party asking for certificates of insurance. But you're really just managing larger costs if you have that policy and you have that protection in place. I mean, if you forego a policy and you run into a situation where, you're now being taken to court for something that you could otherwise be covered for, insured for, you're going to be eating those costs yourself. And it's going to kill your business very quickly, especially if it's a larger claim. So in terms of managing costs, I really discourage people from, pushing the insurance off too far. It is something that you want to consider pretty early on, particularly once you start interacting with the outside world.
Okay. Well, look, thank you, everyone. I mean, we had there's one, I was just checking to make sure we answered the questions that have been posted. Someone saying, is it as complicated as it seems? I would kind of say that, in the startup stages, like just from my personal experience, is, the actual incorporation took a couple hours, maybe to think about it. And I had some other people too, but like the software wasn't the holdback. It was me and all that. And similarly, the insurance, the back and forth took about a week. And like payroll, but really what it comes down to is, if you have partners, or it's like, for me personally, I find the finance, the maintenance, the accounting, all the payroll, all that kind of stuff, it works out to about 1 day per person per week. And that's for a business that has kind of just under 5 million in revenue, as an example, or has under 5 million in revenue. I've been in businesses where it's over and it's much larger than that, but it's kind of, all that stuff is a 1 person a day, a week job. So it's always helpful to have co-founders, but, kind of curious from others about, their experience. Like, is it as tough as all these details make it seem? Anyone want to jump in there?
I think it's getting easier, and there's more and more services that are letting entrepreneurs focus on building their business. So, shameless plug for Ownr, but we really do pride ourselves on making all that early stage legal stuff very easy and going all the way to something like an employee stock option plan, which you can create and maintain through Ownr when you need it. So I think a lot of people are working on solving this problem and making it less scary. And then I think, hardworking, smart entrepreneurs will just be able to make their business work while kind of putting the other stuff, be it legal, insurance, HR, kind of on autopilot.
Mm-hmm.
Yeah, I think that's a really interesting point is, you can pick what you want to do and what you like doing, and you can outsource the rest, and it's only getting more and more affordable. We had a question about security token offerings. So I think there's a lot of unique intricacies about those and the regulation of them. So I don't know if that's something where I think we should cover here or are equipped to cover here. It's kind of, I think a lot of the regulation about those, from my knowledge of the space, is still up in the air, and that the Canadian Security Association is still kind of publishing some of their guidelines on it. So I don't know if it's like a forum conversation, but definitely worth kind of people thinking about it being top of mind for. So I have one more question from my list, and then what we're going to do is we'll move into networking for about 5-10 minutes. If you want to stick around in the audience and speakers, hopefully if you get a speaker, they'll answer some questions directly. Otherwise, you can meet and commiserate with other people who are just getting started. And so this question is for Andrea. Andrea, someone mentioned that they heard that if you hire summer students, it's free, or that you can get repayment for summer students. Is this just a COVID thing, or how does, if you employ students for the summer, or I guess, or any breaks, how does this kind of thing, do you have any insight into how that works? You mentioned you've done that, Humi?
Yes. So one of the things that I wanted to say in terms of managing costs is also around grants. I think that's something that's thought about after the fact, but there are so many good grants that are out there that are available to small businesses, to entrepreneurs. And Humi has a lot of great blog content about wage subsidy programs and, how you can actually process that through payroll. But Humi actually had a cohort of summer students this year. We used the TechNation as part of the Government of Canada's program. It covers, I believe it's between $1,000 to $7,500 in student wages. So that's one option. That's, again, grants that you can apply to that are available for small businesses. There are also a lot of great partnerships with both colleges and universities that actually reimburse part of student wages. So my recommendation is, if you know the type of talent that you're looking for and you know that it's taught in a certain program, always reach out to the Career Center and see first. It takes one email, one quick conversation to understand if the talent is available and if there is a wage subsidy program at that institution. Google is a great way to also just quickly see, who has those programs available. But we used TechNation and had a lot of success this past summer with 8 co-op students.
And just one quick note on that. Longtime TechTO partner, University of Toronto Scarborough, as well, has some great content on their website, and they frequently hold information sessions about how to best recruit from some of their programs. And I think you're right; most universities have kind of similar content available. Mm-hmm. So look, everyone, thank you so much for participating in our introductory course. This is going to be shared as a podcast if you're listening. Great to kind of hear from you. I hope you're enjoying hearing us as well. It was a lot of fun. Please give us your feedback on what you think about the new format, and if it's something you'd want us to try again. We're going to keep adding to Founder Fundamental content through our YouTube channels, etc. And hopefully we can make this an ongoing thing because it sounds like that there's a lot of things that people are interested in as well. All of our partners have been generous enough to share with us some offers, and they are kind of pretty great. So, the links are in the chat. Some of them are in our insider Slack as well, and they should be in your email from last week, or earlier this week. But yeah, great to hear from you. If you have any questions, you can just hit reply on any of our emails, and we'll work from there. Okay, and hopefully